The cattle industry is meeting in Denver this summer, and joining us now is Kevin Good, who is a Senior Market Analyst for CattleFax. And Kevin, you made a presentation. Overall, the cattle industry finally maybe have seen that corner turn.
Well, I tell you what, we've had an awful good run as you think about the last couple of years from a price and profitability standpoint, and combination of that and finally breaking that long-term drought with the exception of the West Coast. So we're sitting in here with the best moisture conditions on average in 20 years, highest calf values we've ever had. With that, we expanded in 2014. 2015, expansion went into hyperdrive. I mean, we're really expanding this cow herd. Looks like we could have a cow herd the first of 16, 1.3 million head bigger. And with that, you know, that's good news, but at the same time, as you play that forward down the road a year or two, means we're going to have more beef in the pipeline, and we're going to have to ask the consumer to consume more of our product. And the question is, at what price will he consume that?
Well, let's talk about that. As some of your presentation talked about the continuing disparity between the retail prices of beef and other proteins.
Absolutely. And as you think about that, pork and poultry supplies this year, both of them up 5 to 6%, and they're still profitable, so they're going to expand again next year. So the discrepancy there is real. You know, looking in the rearview mirror, it hasn't mattered that much, but this summer we're starting to see it. Less featuring for beef, more for the other products. So beef demand actually here, as you look at June and July, is starting to slip below a year ago levels, just like cattle and beef prices are. So that gives us some cause for concern as we move forward. Bigger supplies, probably softer price. You know, the real wild card as we look at it, and here's the trade issue.
Well, let's talk about that in just a little bit. Now let's talk domestically, and as we talk about that profitability as far as cost of production, one of the things we keep an eye on is what goes on especially with the price of corn. Reports are corn crop still looks pretty good, so but that's still that's a dynamic over the last couple of years we haven't had to deal with the extreme fluctuations in that daily market.
You know, the corn market, you know, on average the crop does look good, but the exception would be the eastern corn belt where we've had too much moisture. We're losing some acreage. It looks like the crop's not going to be as good, especially in Illinois, Indiana, and Ohio. And with that, we've had, if you think about the corn market, we've had about a 90-cent rally in the December corn board. And a big part of that's just the funds have gone from a net short to a net long. Well, they're going to stay long until they're proven wrong, and it probably takes us closer to harvest and get that crop closer to the bin. If the crop develops, and we should get some relief in input costs or corn values as we go into the late third and fourth quarter.
Trade kind of that big question mark of exactly what is going to happen with so many different angles to look at.
You know, I tell you, the trade issue is real. As we think about it right now, we've got a lot of headwinds. You know, the strong U.S. dollar, which makes our product, not only beef but pork and poultry, more expensive on the global stage. It also invites more product into the U.S. because you know, of our high 90% trim prices. So that combination is a real issue. As we go forward, you know, it's not only the dollar, but also its access. Right now, we're shut out of Russia for all proteins, China right now, a lot of countries as far as poultry in particular because of the avian flu. And so with all those headwinds, we're having to consume more product at home. You know, per capita supplies of all proteins combined is going to be up about 8-9 pounds this year, which is a huge year-over-year change. And that's why pork prices are down 25 to 30%, and poultry prices are down 10%. And as we go through the second half of this year, unfortunately, beef prices are starting to fall year over year.
Some of the other factors that aren't necessarily on the clipboard is the recent announcement on possible Argentine, Brazilian beef coming into the country, and the situation with retaliations coming from our trading partners to the north and south of us.
Yeah, they're real issues as we think about, especially the Brazilian issue as far as allowing product in state by state. That's probably going to take some time for that to occur, and there are some quotas from a tonnage standpoint that would make it limited short term. So that's probably a little farther down the road before that becomes a bigger concern. The cool issues really is from a retaliation standpoint. It sounds like Canada said $3 billion worth on products. Mexico said 700 to 800 million. You know, it depends on which products. You know, if they put a big tariff on U.S. beef, we've got to remember that we ship about 2.5 pounds per capita worth of beef to both Mexico and Canada combined. You know, that's roughly 800 million pounds. So if we can't put it into those two countries because it becomes too expensive because of tariffs, we'll have to consume more of that product at home. And how do you consume more product? Typically at lower levels.
All right, before we let you go, we always like to ask, get that crystal ball out and see all the factors that you see as we go another good year for those cow-calf guys?
Cow-calf guys still going to have an awful good go. You should think about some of the forward sales that have occurred for fall delivery, very, very strong prices. They're going to continue to have an excellent year. And as you think about 2016, I think they have another excellent year, but you know, we could take $40 to $50 per hundredweight off calf values very easily, and we very well will over the next couple of years, and they'll still be at a profitable level. And so as you think about it a little longer term, it does look like this expansion cycle could be a 3-4 year affair where we keep the heifers and cows back and probably grow this herd a little bit faster and a little bit bigger than a lot of people think.
All right, Kevin, great to talk to you. Thanks.
Thank you.
Kevin Good, Senior Market Analyst for CattleFax, has joined us. I'm Ken Rogers.